Okay, here's a puzzle for you. Is it possible for a stock to be like a sprinting marathon runner and a ticking time bomb at the exact same time? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. So today we're doing a deep dive into Western Digital, ticker's WDC, and we're looking at everything as of November 3rd, 2025.
Right, and our mission here is really to get under the hood of this huge gap between, well, the hype and the reality on the ground. The market seems to think WDC is worth about $150 a share right now.
$150, yeah.
But when you look at our research, I mean, the model's based purely on, current financial performance. They suggest the value is maybe closer to $8.
$8, wow. Okay, that's the conflict we need to unpack today.
Exactly, it's a paradox.
And maybe we should just quickly touch on the wider market picture first, because the NASDAQ is actually looking positive today. There's some tech momentum.
True, but you've also got the Treasury Secretary basically saying the housing market's in recession.
Right.
And worried about high interest rates sticking around.
Yeah, so it's this mixed bag, general caution, high rates.
But apparently not for companies building the AI infrastructure. That seems to be the exception.
Okay, let's get into WDC's story then, because they are definitely bucking those trends. I mean, that last earnings report was, well, it was a bombshell, wasn't it?
Oh, absolutely. Revenue up, was it 27% year over year? Huge.
Yeah, hitting $2.82 billion. And they even hiked the dividend 25%. That's pretty confident.
It is. And the why behind it is just this almost insatiable demand for data storage. It's all driven by the AI revolution.
Insatiable is the word.
I think so. Our research shows customers are placing these massive orders way out, deep into 2026. They seem genuinely terrified of getting caught short on hard drives.
Wow. Okay, so it's fear driving orders that far out.
Seems like it. And Wall Street's definitely noticed. You've got, 20 out of 26 analysts rating it a buy or strong buy, 0 sells.
Right. Okay, so fundamentally, it's a growth monster story right now, driven by this AI panic buying almost.
Pretty much sums it up.
But let's pivot to that valuation piece, because this is where it gets really interesting, maybe a bit weird. You mentioned the detachment. Stock's near $150.
Yeah, and this is the core of the problem, or the paradox anyway. When we run the numbers, the standard valuation models from our research.
The ones based on actual current performance.
Exactly. Based on free cash flow, the value we calculate is only around $7.98.
Yeah.
Based on earnings per share, it's even lower, like $6.50.
Wait. $7.98. You're saying the models, based on today's financials, put it under $8.
That's what the standard models spit out, yes.
How does that even square with a $150 market price? And why are we even calling it cautiously bullish? Doesn't $8 just blow the whole bull case out of the water?
Well, see, that's the thing. That huge gap is the story. It tells you the market is basically throwing out today's fundamentals, or at least heavily discounting them. That $8 figure, that's the $150 price tag. That's the market betting heavily on massive multi-year AI growth that, well, it hasn't fully shown up on the balance sheet yet.
Okay. So the market's pricing in the dream, not the current reality. That's a big leap of faith.
It is a huge leap.
So how's the market actually trading this? What's the sentiment feel like right now? It sounds like a classic tug of war.
It really is. On one side, you look at the options market, decidedly bullish. The put-to-call ratio is low, 0.44.
Meaning more bets on it going up than down?
Way more. Like, for every 4 bearish bets, there are 10 bullish ones. That's pretty strong conviction from the options traders.
Okay, but then there's the other side, the bears.
And they are dug in. We're seeing a really substantial short interest, 11.26%.
That sounds high. What does that mean in real terms?
It means a large chunk of money is betting against the stock. And it's so much that it would take those short sellers more than 3 full trading days just to buy back their shares and close out.
3 days to cover. Okay, so they're not easily scared off.
No, they're committed.
And what about the charts? The technical picture?
Well, the trends, long and short term, they're clearly pointing up. You can see signs of accumulation, money flowing in.
So the momentum looks good on the surface.
But, and this is a critical warning from our research, the momentum indicators are flashing overbought. Seriously overbought.
Meaning it's gone up too far, too fast maybe? Running too hot.
Exactly. It suggests the rally might be stretched thin here, and volatility is picking up too, so traders need to be ready for, potentially bigger and faster price swings.
Okay, so we have this fundamental time bomb, potentially, clashing with this technical sprint that's now looking overheated. Given all that, what's the call?
It's tricky, right?
Our official outlook, based on the research, is cautiously bullish.
Yeah, and let's be clear why. The risks are obvious. That huge valuation gap, the high short interest, the overbought signal, they're all red flags. But for now, at least, that short-term AI demand story, the one backed by actual panic buying and those strong earnings, it seems to be winning the battle.
The narrative is stronger than the numbers for now.
It seems that way. Trying to fight this kind of upward momentum, especially fueled by such a powerful theme like AI, has been, well, painful for bears recently.
Okay, so tactically, what are the key levels to watch? Where's the battleground?
For the bulls, they really need to push it convincingly past the recent high. That's $157.65. Clearing that would be a strong signal.
And the floor. Where does the bullish idea break down? The invalidation level.
If we see it close below $140.15, if it breaks below that, it suggests the bears might be starting to win this round and momentum could shift onward.
Got it. $157.65 on the upside, $140.15 on the downside.
Those are the key lines in the sand right now.
So there you have it. Western digital. It really is the market's ultimate paradox right now, isn't it? Kind of a trader's dream, maybe, but potentially a value investor's nightmare. And the lesson here, maybe it's not just about WDC, it really makes you ask yourself, are you investing based on today's reality, that $8 number? Or are you investing based on a strongly held belief about an AI future reflected in that $150 price? That's a big question to chew on. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investment decisions. Thanks for tuning in. Catch you in the next episode.